Hello and welcome to the On the Rocks podcast. My name is Nicholas Pan and I'm the head of content and marketing at Prospector. For today, I will be the host. Emily will be back on the next podcast. Today we have a chance to discuss gold and its role in financial markets with Marco Roque of Cassiar Gold. Mr. Roque started his career in private banking with Millennium BCP, a large Portuguese bank, and joined Barclays Capital in 2007, where for several years he spearheaded the Portuguese derivative and structured products team with a focus on commodities. He holds a CFA charter, an MBA from Hong Kong University of Science and Technology, and London Business School, a Master of Finance from the Nova School of Business and Economics in Lisbon. He's currently exploring for gold in British Columbia's Cassiar Gold District, so let's get to it, grab a drink and enjoy the show. One thing I always kind of ask everyone that kind of ends up in this industry is just kind of, I have friends that wanted to go do tech or wanted to go do banking, but they never really kind of wanted to be like, go do mining or mining investment. I didn't I'm from Toronto. I grew up in all around it, but I never really kind of pictured it as a career myself. So how did you kind of end up in this space?
Yeah, no, that's a great question. It's I think it's not necessarily the most glamorous. The glamorous thing is talk about crypto or tech or whatever it is. But just my personal story. So I'm actually Portuguese born and raised, and I started my career in banking. So I started in private banking, and then I did capital markets at Barclays. And so I was at Barclays during the financial crisis in 2008. And I was seeing the events unfold from my desk, and I was surprised and shocked as to what central banks were doing. And I just thought that bailing out banks that took way too much risk at the expense of the taxpayer was just a crazy proposition. And I couldn't figure out why would governments and central banks would want to do that. And then I started looking a little bit deeper into the monetary system and how it works. People are just typically very have a little bit tunnel vision. In today's world, the world is so complex, and there's so many things to read about and think about and understand in your life. Who has the time to understand the monetary system? And the more I read about the monetary system, the more one simple phrase coined by J.P. Morgan made sense, which it was, gold is money, everything else is credit. So effectively, the process of the financial crisis in 2008 turned me into what people generally call a gold bug. I can proudly call myself a gold bug. And, I started investing in gold, started with the metal. And then I started thinking, where does the gold come from and how is it made? And understanding that gold is produced in supernovas, spread throughout space, ended up in very small amounts in the Earth's crust eventually. And it's hard to find and expensive to mine. And humans love it. And it has a 6,000-year track record. And then I started looking, how can I have more exposure to gold? And then I started looking into miners, because miners have that operational leverage to gold. And typically what you see producers, for every 1% or 10% move in the gold price, typically a producer on average will move 3 times that, or 30%, which means 30%. And I find that quite exciting. Started looking at gold mining companies, and then I kept going into the rabbit hole, thinking, well, where does a gold mining company come from? It's like, it comes from a development project. Okay, you look at the valuations and the leverage that a development project has to the gold price, and say, this is quite attractive. This is even better than buying a stock of a mining company. And then it's like, wait a minute, how these development assets come about? You start looking into exploration risk, and you start to realize that exploration is risky, but it comes with big rewards as well. So if you do your due diligence, if you do your homework, you can actually find some gems, or in this case, some gold, some nuggets, and that's really how I end up where I am today.
Fair enough. Yeah, you went down the rabbit hole, or the drill hole, so to speak. But that's one of the toughest things for me, is like explaining to people, it's like, how do you kind of value these things a little bit, because there is a little bit of mystery around it, and but at the same time, it's like, there will be a company that's generally defined a resource, but it's just or like, there'll be a couple million ounces or maybe even a couple 100,000 ounces sitting somewhere. It's been sitting there for 10, 15 years or so, but it's not appreciated. So I'm always trying to figure out, what's the balance between kind of marketing, getting the word out versus that kind of real value in the ground. And so I don't know if you kind of have any perspective on, like, are explorers kind of discounted on like a general average, like they're only worth like a certain percentage of a gold bar or of an ounce, or is there kind of a commonality of kind of how juniors are explored, or is it very kind of project specific?
I think it's both. I think it's project specific, but you also have some kind of rules of thumb that you can look at. Every single project is unique, and that's just a fact. You have some general averages that you can look. If you have a pre-production company, a gold production company, you can look at the discounted cash flows, and it's probably, you do a DCF on it, and that's a pretty good valuation metric. If you go at the development projects that typically trades at the discount, you have the risk of execution on developing the project and building the project, and then you have issues with ramp up. You have some variables because deposits are drilled and you have a level of confidence, but there's always a little margin of error. And when you go to the explorers, it really depends on the stage. You have grassroots, which it's really really hard to value. Or when you look at advanced deposits that already have a resource, you can already start to put some metrics there. And you have, depending on how advanced they are or some of the characteristics, the size, the grade, the location, permits, infrastructure around it, you can have resources being trading from $5-10 an ounce all the way up to hundreds of dollars an ounce. Taking into consideration that if you look at most projects these days, the profit margins are in some cases over $1,000 an ounce, right? If gold is selling at 1,900 and your all-in sustaining cost is 900, your profit margin there is $1,000 an ounce. So you have some of those metrics, but again, every project is different, and there's a long list of risks you need to face. And but because it's risky and it's also not easy to assess, you can find some nuggets.
Fair enough. That's probably one of the greatest things at least I kind of enjoy when I've kind of invest is just, there'll be a project that's within a larger company that gets spun out, and then you can kind of see that company doing really well on its own. Like, that project's been there for a very long time, but also even kind of revisiting projects as well. Like someone goes back and, there's a couple of famous stories of, because you can kind of miss that deposit in the past, but then someone comes back with a new kind of eyes. So yeah, no, I'd like, it's a whole world where you can, like, there's a million different things that kind of change it. So it really is just kind of like a unique, you got to kind of take each project uniquely. But that being said, like the junior sector kind of moves, like it's momentum driven to some degree. Like, I don't know, from your past experience, like, so for the past, like, I think the market started to turn about 3-4 years ago, or at least like there was like at least a bottom around 1250 or so. Have you seen a renewed interest in juniors, and like, do you see it being sustained? Like, do you see people consistently coming back, or, I don't know, when did you feel like the market was kind of changing a little bit for you, or at least for the gold sector?
Well, I think I'm very I'm very biased, so
Yeah.
you have to take that with a pinch of salt. I'm a gold bug. I believe in gold. I think sentiment plays a big part. I think there's several. What we're seeing right now is a convergence of several trends that are coming together. I think on the supply side, on the operational side, if you exclude the last couple of years, on the previous 10 years, there was basically almost no exploration spending whatsoever from mining companies. The gold mining companies were just trying to cut costs, reduce their costs. Gold took a deep dive, started going down in 2011 substantially, and miners were just focused on margins, and they spent 8 to 10 years basically not spending any money on exploration, and they were just going through their reserves and resources. And that's actually a very important factor, because what that created now is a lack of supply of good new projects that are available for these mid-tiers and majors to grow their future production profiles. So that's on the supply of gold side. On the other side, on the demand side, this is not something new, but I think monetary policy is getting crazier and crazier, to be totally honest. The amount of money that was printed is just staggering. And central bankers want to convince you that there's no problem with that. Yeah, but if there's no problem in printing, I think we can print infinite money and solve all the world's problems just with central banks. But that's obviously not the case. Obviously, all this printing is generating inflation. And what you see really over the years, even in the decades prior to 2008, is a continuous devaluation of fiat currencies or the dollar or any other fiat currencies to a more or less degree. So I think what we're seeing now is a renewed interest in the sector. The fundamentals for gold have never been better. The debt levels that we have today are much higher than in 2008. Inflation is just is getting out of control, and I don't think there's no way you can put it back. The genie is out, and you can't put it back in, because even if you believe that inflation is just only 8 or 10%, and I can tell you, nothing in my life has increased by only 8%. Everything is double digit, at least on the corporate side for a company. Me as a consumer, everything I buy is at least 10% higher. Everything that I buy is more than 10% higher. And what people need to take refuge somewhere from the devaluation of fiat currencies, and gold is the longest lasting form of money, and people are coming in, and I think people are waking up, and you see a renewed interest from people in the sector, but also from generalists trying to find some sort of protection in this environment. And then you have all these crazy things that came with COVID, supply chain disruptions. Now you have war. You have basically Russia openly threatening nuclear war. This is really scary. And yeah, so I think in an environment like this is one of the best fundamental setups for gold I've seen in my life. And I've studied the history of gold since 8,000 years ago, and this is one of the best setups for gold I've seen. And I certainly think that we're in a very, very good position for gold. So I think there's a lot of interest starting to come in, and I think there's going to be some great few years ahead for gold, and that will trickle down from the producers all the way to the developers and then to the explorers. And that goes back to the initial point. Having spent 10 years not investing enough in finding where the new mines will be, now you'll have a whiplash effect, because projects on average from discovery to production, there are several studies that take on average 18 years. So as gold price goes up, you'll see new projects getting developed, some new companies getting taken out that have exciting projects in safe jurisdictions. And then only then you'll start to see a substantial increase in exploration spending from the big mining companies. And that to turn into new supply is going to take years. I think the setup is good, and it should be a long and big bull run on gold. But that's, this is just my opinion. Do your own research as well.
Fair enough. But you've opened up kind of two branches of kind of like discussion, and I'm going to go down the demand side here a little bit, because I've had pretty curious about this. Is because I was in the market in 2008, 2009, and still was working in the market all through the bottom of the market. Had global financial crisis was pretty good for junior miners, but then it just kind of stunk for a very long time. But the economy kind of kept going on. It was bailed out. And I'm secretly convinced they've been trying to bottle cap this inflation for 4 or 5 years. I was just wondering if your thoughts, what are they trying to do? I've heard of one theory is they're trying to kind of extend the debt, extend the terms of the debt. I'm not an economist, but this inflation, I'm wondering if it's been baked into the cake since 2008, 2009. We've just been kind of waiting for this to kind of happen.
I think the central banks are trapped. You look at the amount of leverage, the amount of debt that was built in the economy over the last 15 years, from governments to corporates to consumers. The amount of debt is staggering. I think that central banks don't have much of a wiggle room. When you look at the U.S. government that has basically $1 trillion in debt, how high of an interest rate can they pay before they go bankrupt? 3-4%. At those levels, they just on interest, they're paying $1 trillion a year. That doesn't sound very sustainable. So I think specifically the Fed, but the same applies to every other central bank, to a lesser or larger extent. They're stuck between a rock and a hard place because they know they can only do so much. They can only raise rates so much before they either bankrupt their own governments or force them to, cancel the debt or something like that, which is something relatively scary for the financial markets when you think about it. So, and this is effectively what they've been doing for the last 15 years. They're talking really tough and saying they're going to raise and they're going to do this and they're going to do that. But so far, in this cycle, they've only raised once 25 basis points. Inflation is, according to the statistics that are published, supposedly 8.5 or 8.5%. I don't think a 50 basis points rate hike is going to, make much of a difference in inflation expectations or inflation itself, even 2% or 3%. And then at that point, you start thinking, well, can the U.S. and the federal government really sustain this level of interest rates? Can they really do that? So the Fed is basically left with only one option: talk really tough, pretend they're going to do a lot more than they actually will, to try to lower inflation expectations and hope for the best. But the reality is, I think, as everyone is feeling in their wallets, inflation is much higher, and that's really hurting savers that save in U.S. dollars, in favor of deflating the debts for the debtors, which to a large extent, that's the government too. So I think that's the most likely solution. I don't think they want to force the government to go bust. I think they'll just try to let inflation run high, 10 or 20% a year for 3, 4, 5, 6 years, basically making every single saver in US dollars lose half of their wealth, inflation adjusted, and also at the same time effectively halving the real value of that to half over those years. I think, again, this is my particular view.
Well, that being said, you'd also mentioned supply chain issues, and just goes to the character of gold, gold mining. Is gold mining distinctly kind of different from the rest of the sector, in terms of that kind of value or the fundamental setup? Because the supply chain issues is bringing up kind of new life to kind of even zinc or fertilizers or other aspects of the mining industry, and even inflation is kind of affecting them as well. Is gold uniquely the best way to kind of protect your asset, or could you kind of look at other metals such as, titanium, which is a big component, that's a metal that's produced in Ukraine, or then potash, which is also produced largely in Ukraine, Belarus as well? Is gold uniquely the only metal that's going to benefit from this setup, or is it just inflation just driving the price of everything up?
So there's two things. I think inflation will drive and is driving the price of everything up. I think those specific smaller markets that have very high exposure to a particular country, wheat, for example, which is, I think it's a 20% of the world production comes from Ukraine and Russia. For example, oil. There are some commodities that are more affected because of the location where they're produced, and they're exposed to specific political or country risk. On that side, I think commodities in general, I think, are going up. Those specific markets are going to be obviously specifically affected. But I think gold is going in parallel with those. But more importantly, once trust in what is still de facto the global reserve currency is the US dollar, once confidence in that starts getting eroded, that's when you start to see people pile up into gold. And then I think gold will have an outsized return compared to other commodities. And that will be a relatively scary scenario. And the people that believe in these scenarios, they will not tell you that gold is going to go to 3,000 or 4,000 an ounce. They will tell you much larger numbers. And I think, that time is coming. I think empires come and go. You look at the histories of civilizations and the coming and going of their respective currencies being the global reserve currencies. The first one traditionally is actually Portugal, and the Portuguese currency was the first global reserve currency. With the age of discoveries, started global trade and started a trend of globalization, followed by the Spanish and the Dutch and the French and the British and the American. Now, people ask what's next. It remains to be seen. I have my issues trusting the renminbi, although I think that China will be the taking over as a global leading economy very, very soon. But I think the market will also adjust because I think it was a lot easier to trust the previous hegemon, the U.S., than the new hegemon, China.
No, for sure. Yeah, no, I've always tried to kind of figure out that difference between gold and other metals. Like I thought, like, sometimes palladium, I'm like, or rhodium, like, stuff like that. Other precious metals might be good investment. But it also goes to kind of like speaking to kind of the fact of jurisdiction. And I know that you have a project in British Columbia, and like, do you see like more investment dollars are going to be kind of moving towards kind of safer jurisdictions? Like, people have had some bad experiences in Latin. Well, people have had bad experiences everywhere, but is there going to be a preferential treatment towards exploration dollars, going to the Canadas, the Australias, and such?
I firmly believe so, and I've been waiting for that for a few years. I think the problems that I was mentioning brought about by this monetary policies that we've been living over the last 15 years are not unique to the U.S. or to the West. It's all over the world, and in fact, emerging countries typically have it worse. You have the case of Zimbabwe or Venezuela or Argentina, to name a few. So I think investors will gravitate towards safer jurisdictions as things get worse. And I do expect some problems. We're already facing an energy crisis. We're about to face a food crisis, and the price of everything is going up. And typically there's three things that generate social unrest: higher food prices, higher energy prices, or higher housing prices, which are the three main staples of of every consumer around the world. Because when it's hard for you to get one of those, if you have a family, you start getting pretty desperate. So that's the kind of setup that generally generates social unrest. And I think you're already seeing social unrest, and you're already seeing some countries making some, what I would say, dangerous moves. You're seeing now Chile considering basically changing the constitution and effectively, putting at risk its attractiveness as a mining jurisdiction. And investors are actually sitting on the sidelines and see what's happening there. And you saw a few cases, for example, in Kazakhstan. You'll continue to see around the world social unrest, and then governments, when they run out of money, they're going to go for what's valuable. You've seen in the past they go for oil, they go for gold. They go for whatever can pay the bills. And having a sound legal system that protects people and investors from overreach from the government, and where there's stability, fiscal stability, regulatory stability, those are the places where investors want to be. Because one of my board members says it quite often. The biggest cower in the world is money. At the first sign of danger, the money goes out. And I think governments need to be mindful of that, because sometimes trying to get their hands on the money, no matter how great their ideas to spend the money are, they're going to scare away investors, and then you go on a spiral. And Venezuela is just a great example. It's such a wealthy country that has more oil reserves than Saudi Arabia. Can grow anything there. It has gold. They have everything, but bad policy mistakes just put the Venezuelan people in a very dire situation. And long story short, this was a long answer, but I do think that places like Australia, Canada, US are going to continue to gather interest for investors, and that's where investors will be protected. And projects that are advanced and exciting are getting fewer and fewer. So it's a good position to be.
Well, I was, I've always focused on Canada myself, and I was convinced the Australians were going to take over Canada's mining business, because they've made a couple of big kind of acquisitions in Canada. I'm not going to name any specific companies, but even BHP, they moved their exploration headquarters to Toronto. There's been some acquisitions out on the East Coast. I'm just wondering if, do you see any fundamental differences between the Australian mining industry and the Canadian mining industry? Or, now we have Twiggy up in Northern Ontario. So I don't know, are there some fundamental differences between it? Like, are Australians coming to take over Canada's resources? Or, I don't know.
Uh,
It's just like a little scenario I've always played in my head. I'm like, are they coming? Are they going to buy us all out?
when you look at valuations in Australia and in Canada, valuations in Australia are still slightly higher. I think also that's more of a function that, in my opinion, that the risk capital in Australia basically has gold exploration to play with, and in Canada there's a lot of distractions for risk capital. You have cannabis, blockchain, you name it. So the valuations are slightly higher. I don't think there's big fundamental differences other than that. I think they're very two similar countries with two very similar, cost structures and size and yeah, I think anyone could be the winner. I think it all comes down to the companies and the decisions that they make and how they make it and how they play their hands. And if you make the right decisions at the right time and acquire the right projects at the right price, you'll do better than the others. So I think the Australians are very smart to come to Canada and scoop some assets that might be a little bit cheaper than what they would otherwise have to pay in Australia. So good on them.
Fair enough. No, I'm not holding it against them or anything like that. I'm not trying to stoke any type of international mining conflict or anything like that between competing for resources.
Yeah.
Just I've always been curious what happens on the other side, down under. But that being said, we've been speaking for a little bit. I wanted to maybe ask you a couple questions just about your project in the Cassiar district of BC. So maybe if you could kind of maybe just briefly introduce what is the Cassiar district and kind of maybe a little bit of a history about it, or not like a full history, but just kind of a brief profile of the district.
Absolutely. So the Cassiar district is actually a boom mining, gold exploration district that you start seeing the pioneers going there in the late 1800s. We now control the entire district as a company. It's the Cassiar Gold District. It's 100% owned, 59,000 hectares. We already have a really substantial resource there, over 1 million ounces, over a gram per ton, right at surface, and completely open laterally in all directions and at depth. So that's a kind of a bulk tonnage deposit with lots of room to grow. And that's at Cassiar North at Taurus. And we also have another asset called Cassiar South, which is just adjacent south of the highway, where we have some high-grade veins, where we have some really spectacular intercepts. Just last year, we reported, an intercept of 4.8 meters at over 35 grams per ton. So that's an underground scenario, so that we're looking to explore as well. And it's quite exciting. We're actually just in the middle of a bought deal financing led by Raymond James, Red Cloud, and BMO. And this year, actually, we're going to open camp in a few weeks, and we're about to start one of our largest drill campaigns ever. We're looking to drill at least 20,000 meters, continue to grow our asset there, and who knows, maybe the Australians want to come and take it.
Fair enough. But working in Canada, working in British Columbia, are you seen any renewed interest in mining in terms of kind of younger people than younger kids getting into it, or what's the average age of kind of maybe workers or people that you're seeing? I'm convinced Canada literally grew up with the generation of no one training mining except for a couple mining engineers. So I'm just wondering what you're seeing on the ground, at least in British Columbia, like some demographics.
Yeah, no, I think from our side, I think on our company, I think we have an excellent team, really composed of very experienced as well as a few young and very hardworking geologists. So it's we have a great team. I think generally in the industry, we actually last year. I don't think this is just in mining or exploration. We saw the labor market really tight. Was hard to get last year quality people. I don't know if people were afraid of working with the virus or because people were getting paid to stay at home. They were basically not going out and work. Maybe it was an incentive issue there. But I would certainly like to see a lot more people interested in the mining space. I think, unfortunately, people still especially younger generations, still have this preconceived notion that mining is somehow not good. But we need mining for everything we do. from supporting our monetary system to from using the computers that we use every day. It's essential in our lives, and I think what people should think about is actually, instead of just assuming that mining is bad, is how can you make mining better? How can you make mining more sustainable? And how can you protect the environment and the world and benefit the communities where you are by doing mining in a proper way? So I would like to see more young people excited to come into mining, but let's see what happens.
No, for sure. I'm all for less crypto kids and NFTs. Oh, I just sounded like an old person there. Less NFTs, less crypto, and all for that. But Marco, we've been speaking for about 45 minutes here, so I don't want to keep you away from work or anything like that. But I just wanted to thank you very much for taking the time to be a part of this podcast. I don't know if there's any kind of like final words or kind of things you might wanted to kind of say, but if not, I'd be happy to kind of end it here. Or
no, I just want to thank you, Nick, for taking the time. It was a great conversation. I truly enjoyed your company and the whiskey as well. And hopefully, people that might be listening find the conversation interesting, and don't forget to do your own research as well. I think there's a lot of opportunity out there if you know how to find it.
For sure. And are you going to be at PDAC?
Yes, I'm going to be at PDAC in June, which is in Toronto. And since I'm on it, I might as well do a little plug. Cassiar Gold. You can find us at www.cassiargold.com. Our ticker is GLDC on the Toronto Stock Exchange. So do check it out, and feel free to reach out if you'd like to know more about it.
All right, perfect. Thank you very much, Rocco, and have a great day.
Thank you. Thanks, Nick. Have a good night. Take care.